Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Monday. It's July 18th. The market's going to open up in about an hour and 27 minutes. And boy, oh boy, we are rocking and rolling. The Dow's up near all-time highs for the night. The Nasdaq is up 145 points. And as usual, the S&P is meeting us in between. Now, today's Monday. I want to give you all the threats, all the opportunities, all the stuff that's hanging over our head this week. Let's start off with the global data, and then I'll get into the nitty-gritty. Chinese media reported that some stalled real estate projects had resumed construction after buyers threatened to stop their mortgage payments. The Chinese Bank and Insurance Regulatory Commission ordered banks and insurers to guarantee the handover of the apartment contracted for construction. That's a good thing. New Zealand, oh boy, this recessionary pressure is hitting everybody. New Zealand shares edged higher even though the government reported inflation hit a 32-year high, and it's higher than the previous quarter. It was at 7.3%. That's pretty good. That's pretty big for New Zealand. It's not a big country. Inflation, investors are awaiting a decision by the European Central Bank on Thursday. We still got a while to go on whether to raise interest rates for the first time in 11 years to curb inflation. I want to see how that goes. Europe is feeling the pain from Russia's war in Ukraine. Mounting pressure from high energy prices is driving record inflation and raising the likelihood of a plunge back into a recession, even as prices push perilously higher. Perilously. How many people know this word? My God. Though data last week from the U.S. has been getting really positive, especially retail and consumer data. Let me tell you about that. And this is one of the reasons why the market rallied so well on Friday, and I believe that's one of the reasons why it's rallying right now. A July survey from the University of Michigan showed that inflation expectations held steady, or improved, along with the general consumer sentiment. Folks, consumer sentiment is what drives the economy. That was a welcome news after reports that showed consumer prices remained extremely hot in July, along with wholesale levels. The report also bodes well for investors looking for signs that the Federal Reserve might eventually ease off its aggressive policy to fight inflation. And as a result, the S&P rose 1.9%, snapping a 5-day losing streak, and it looks like we're up pretty good today. Inflation and its impact on businesses and consumer remain the focus on Wall Street. That really is the focus. And COVID also starting to come back into the limelight. But I got to say, we had 3 consumer and inflationary reports Thursday and Friday last week, as I just mentioned, a couple of them, and they were really, really positive. I mean, very encouraging. The Federal Reserve has been raising rates in an effort to curtail rising inflation. The Fed has already raised rates 3 times this year, and it's priced into the market that they're going to be raising rates some more. But the good news, and I've been showing this to anybody who's been wanting to pay attention to me, is that if you look at the bond market, the long bond is no longer moving down. It's now moving choppy. It's moving sideways, which is how a lot of the consumer stocks, like, for example, Amazon is starting to behave. Notice that? How about the consumer discretionary or consumer tech sector? See that? How about? It's not a coincidence. The bond market is very sensitive to the consumer, and discretionary stocks are very sensitive to the long bond. And if the long bond can stay this way, so can these stocks. Now, last week we had a big focus on consumer data and inflationary data. This week, the main focus is going to be on housing. You've got housing market index, housing starts, existing home sales. Then you've got manufacturing, but and the manufacturing activity is going to be the big one. But we're going to start the week off with housing starts, and it's going to be, I believe, correct me if I'm wrong, the first non-fragment week where we start on Monday, end on Friday, don't have any holidays in between. Everybody for the 4th of July is already back, so we should see a nice full week. Now, a few things you need to pay attention to. We've got earnings this week. I told you I was going to give you a full analysis. B of A, these are the earnings per share estimates that are baked in. You want to pay attention to Bank of America, Charles Schwab's, Goldman Sachs, International Business Machines. You want to pay attention to Charles Schwab to see if they're increasing their deposits. IBM is doing clouds right now. Bank of America is coming out. There's a lot of news. Tomorrow, the big news is going to be Johnson & Johnson and Netflix. I already itemized the big numbers for you. You may want to rewind this video, take a piece of paper and a pen and write it down. We're reporting $2.50 per share for J&J. Netflix, be careful with Netflix, man. Be careful. $2.96 they're expecting. And I love Netflix as a consumer, but I'm not sure about Netflix as a investor. Halliburton is investing. Interactive Brokers is going to be very interesting because it'll give us a good idea of whether investors are opening up those accounts again like they were during the COVID rush, or they're still backing away from the market. On Wednesday, you've got Abbott Labs, Biogen, Comerica, nice bank stock here. You got NASDAQ. That's going to be very exciting. Railroad stock. On Thursday, you've got American Airlines. You've got DB Horton. It'll be very interesting to see what their PE ratio is so low right now. You've got Domino's Pizza, good consumer stock to see whether consumers are starting to spend again. A couple of bank stocks, KB Financial, Nokia, Philip Morris, a lot of interesting stocks. And on Friday, you've got Twitter. Again, I just wanted to highlight this for you. If you want me to send this to you, just send me an email, support@marketgeeks.com. Let me know if I'm helping you survive during this challenging times, and I'll send this to you. But anyway, support@marketgeeks.com. Twitter's coming out. They're looking at, let's see here, 15 cents per share, 25% down year over year on higher revenue. American Express, this will be very interesting to see forward-looking statements. I'm actually a lot more interested in the forward-looking statements than the actual expectation. You've got Verizon coming out. So again, just to give you a nice little Bank of America, Charles Schwab's, Goldman Sachs, International Business Machines today. Tomorrow, J&J, Netflix. And the numbers are right here. And I could send this to you if you want it. Just send me an email, support@marketgeeks.com. Halliburton, Interactive Brokers. Wednesday, you've got Biogen, CSX. Thursday, you've got DB Horton, Domino's Pizza, KB Financial, Travelers, very important. And Friday, you've got Twitter and American Express and HCA Healthcare, but those, and Verizon, Schlumberger too. Anyway, those are the news. Now, what have we got so far? So far, for this up till Friday, we've had about 35 stocks come out. So far, they're down 10% on 9.3% higher revenue, but because the expectations are so beaten, 68% have beaten expectations and 62 have beaten estimates. Bank stocks, JP Morgan down 27%, Citibank down 22%, Wells Fargo down 48%. What did the market do? It rallied on this news. So again, the biggest weakness is loan loss provisions. Now, with respect to the entire financial sector, we've got 23% of it out. Total earnings are down 27%. But again, even with them being down 27%, over half have beaten EPS estimates and 45 have beaten revenue estimates, which means estimates are down like there's no tomorrow. Now, top stocks this week. I'm still focused on the consumer sector, on the consumer staples, and the healthcare sector. On a cumulative basis, they are the strongest two. And on a monthly basis, they're the strongest too. But look at what's behind it. Tech and consumer discretionary knocking on their door. If inflationary pressure stays low, these will start rallying again. The Russell 2000, all those Kathy, look at ARK. They've been basing out for months now. Look at that chart. Remember that chart of the bond market I showed you? It's not a coincidence. Not a coincidence. There's a reason for all of this. We're starting to see a basing. Bonds not going lower, not increasing interest rates, causing these stocks to start moving sideways. So again, let me show you the stocks that I'm loving right now. These are the healthcare stocks. These are my favorite healthcare stocks right now. Merck, VRTX, Lilly, Ciena, Humana, MCK. For consumer staples, I really like Dollar General and Dollar Tree, but I'll take the rest of these. GIS, K, CPB. Now, I started recommending these stocks exactly a year ago when I was in Lake Winnipesaukee, and my readers thought I was nuts. You guys still think I'm nuts? So, as far as what we need to pay attention to this week, definitely pay attention to earnings. But what you also want to pay attention to is the S&P 500. Now, we are at very crucial levels right now. If we can go above the 393 level, there's a good chance we can have a nice little breakout, right? Right here, this level right here, which right coincides with the 50-day moving average. So 392, 392.50. On the Dow Jones, that level, and I haven't changed it, it's at it's about 31,900 to be specific with you. Yeah, 31,000 in the almost 32,000, between 39,700 and 32,000. And on the QQQ, and by the way, notice they're all moving sideways, just like the bond market. And on the QQQ, a little higher, 313. QQQ. Now, let's see if semiconductors are doing the same. Almost right there. On semiconductors, the 220 level on the SMH. Folks, a lot of things are happening this week. Look for breakouts above these levels. Keep your eye on these two sectors, healthcare and consumer staples. Keep your eye on these stocks right here, and keep your eye on these earning numbers. Told you I was going to have a lot of info for you today. Folks, before I let you go, as I mentioned last week, my strategies use 5 specific patterns to spot trade entries. They've been on fire. Since I went live on May 23rd of this year, that's right, we've had 9 trades and 9 winners. 100% success rate. Hell, even the bonus trade I gave you on the Russell made money. So technically it's 10 out of 10 if you really want to be specific with me. And the average gain has been about 15.3% on the options. And our average holding time has been 3 days. Now, I don't know about you, but if you can get a 100% win rate in this market with a 15% win rate on the options and a win rate of 3%, and a hold period of three days, you're probably killing it. We've been killing it. Of course, not every trade's going to be a winner. We're going to have losers too. But given how crazy the market's been lately, I'm even impressed how well it's been performing. I wasn't expecting 9 winners or 10 winners if you include the bonus. So I want to give you all the details. I want to help you get in on this strategy. I want to show you how it works. Tomorrow, June 19th, 1 p.m. Eastern Time, that's tomorrow. You need to click the link below to get in on this live event. Folks, you do not want to miss out. This is life-changing, and I don't say that lightly. I've been working on this pattern trader for a long, long time. It's finally out, and I got to say, I can't do better than I've been doing. I've had only winners. So, of course, we're going to have losers. It's part of the game. But for now, we're doing real well. And the market's getting choppy and more volatile, which is the most optimal time to trade these patterns. Non-directionally, 3 days up, 3 days down. I love it. Love these swings. Follow the link below. It's happening tomorrow at 1 p.m. You don't want to miss out. And I'll talk to you guys later. Send me some love letters, feedback, comments, support@marketgeeks.com. I want to hear from you. Bye, guys. Take care and have a great, great week. It's going to be a volatile one. Bye.